Kitco Mining's special coverage of the CIM Convention and Expo is brought to you by CSE, the Canadian Securities Exchange.
Welcome to Kitco Mining. I'm Niels Christensen, and welcome to their continued coverage of the CIM Convention and Expo in Montreal, Quebec. Today, we're talking copper, nickel, and zinc with Jeff Hussey, President and COO of Osisko Metals. Jeff, welcome back to the show.
Thanks for being here, Neil.
So copper is a fascinating market. I mean, everybody's talking about demand. We have this dearth of supply, this massive lack of supply, and just this growing demand. Just before, the first question I wanted to ask is, what are your thoughts on base metals? Copper, nickel, and zinc.
Well, as we talked about a little bit earlier, when we start looking at inventories, you think about demand. We've been talking about the increase in demand for zinc from the infrastructure stimulus that should come on the back of COVID. And I think that's coming, but it's slower than, it's not pulling as much on the economy. There's so many geopolitical uncertainties, I'll leave it at that, which continue to challenge the market for lack of getting into that weeds. But the inventories are really low, and that's something I've followed all my life. I know there's hidden inventories. I think there's a lot less hidden inventory now. So I think the market is really tight, and when the demand does uptick, we should see what we've been, I was keynote 2 years ago during COVID. I wasn't forecasting a supercycle. Everybody's forecasting a supercycle. When that demand kicks in on low inventories, I think that's where you could get an exponential rise. So when we look at all the investments that the mining sector have been quote unquote complaining about, because there's a limited amount of venture capital, be it in technology and cannabis, in crypto or whatever, that's where the money, venture capital, went to. I think we've heard some of the senior banks talking about it's time to turn back to commodities. So the smart money is indicating this is the sector. The inventories are low. The demand forecast is high. I think it's a turning point prior to this super cycle. Now, I've been saying that for a while. It still has to happen.
So, okay, I guess right now we are, I don't disagree. I think you make really good points. I'm sort of wondering, recession versus growth, how all of that sort of impacts this cycle. Part of me wonders, how copper must be a little bit recession proof given where inventories are and given just this demand that we're seeing. Everybody talks about, the electrification and how much copper is needed in electric vehicles. Are you, as a copper guy, are you worried about a recession and what that does to demand?
Not really. I think the downside to copper is significantly lower than the upside from everything everyone's saying. In the presentation I'm going to do later today, my partner Bob Wares, he's done a lot of research on this, and I think it was a slide by Altius that said the price needed to incentivize production to come online is going up. It's about $450. Why? As the previous slide we're going to talk about is you see the inventories coming down and the exploration development dollars are coming down. So how do you develop what's needed for the future for this huge demand after a decade or more of lack of investment? And that's the same story in other base metals. And I could go on for about an hour on that alone, just because of the change in the dynamic from having major, we'll call them tier 2 companies like an Aranda, where I worked, or Inco, or those kinds of companies. Now we're into the big companies. And for a big company like that, they need a big project to put their time into it. So there's a lot in the middle that's not getting done, or there's no attention. That's our niche. We're trying to find those tier 2 assets that have good infrastructure, good metallurgy, and exploration upside. And that's always been the case. So we're in that space. It's been a tough space. But I do think that demand is coming for electrification, copper. Look, we're betting on our Gaspé project that higher than $4, if not $4.40, $4.50. And that's what that chart is saying, is due to the lack of investment. If you want to see investment in new exploration and development of copper mines to meet the demand that is coming, it's going to have to be at 450.
So is the future in copper then smaller projects, like you say, the 2-tier? I mean, is that because you don't
small
see
and big. They're small and big. So
we don't see the mega.
That's coming once the price gets there. Okay. That's once you give that price of 450 long term, the big ones will come.
Okay.
But you can't do it when you're bouncing between 250 and 350. So we looked at many projects at that range, and they're difficult. But at the 450 range, they work. So the price, if the demand is going to come to electrify to meet global decarbonization objectives, do you need copper? Yes. Then you're going to have to get it to that price to incentivize the supply to meet that demand, because there's not enough supply to meet the forecasted demand. And I can go and switch that conversation now into zinc.
I was going to ask.
And it's the same thing. So in zinc, the inventories are very low due to the neglect over the last 20 years. The reason why we started Osisko Metals was the zinc market, because I worked at Noranda and zinc mines. So we did.
Well, and your first project was Pine...
Bathurst Camp,
yes,
which is where I grew up.
Yeah.
And then we found Pine Point, and that was the better project, so we focused on that. The Bathurst assets, we'll still look at them. We'll keep that, it's a second priority for us, but it's still, that's where we started. But again, good assets and brownfield camps with infrastructure, good metallurgy, and upside exploration potential. That's usually our target for a project. And in the case of Pine Point, we've got it in spades, right? So now we're financed the permits. We just, in July, we signed a $100 million deal. So that brings us to shovel ready at Pine Point.
Wow.
Right? And then it gives us a bit of money before, and if we're on budget, we get a little money at the end over a 4-year period. And that allows us to pivot and look at Gas Bay. We're funded for Pine Point, because raising $75 million, or even let alone project financing of $650 million on the market, very tough.
Yeah.
And without getting into all of that, the markets are tough for base metals, but it's about to turn.
Well, I was going to say, is it how tough? Like, it feels like it's easier than precious metals. I've been.
I don't agree.
Really, because I've been to a bunch of conferences now, and it's like critical metals.
Maybe now
is getting a lot of the oxygen,
but not over the last 5 years.
Okay. Yes. Okay. I will agree with that, because
we'll find a way to agree at the end of the day.
Yes, but because it is.
Yeah, I would say that. And that turning point that you're feeling is because of the importance of critical minerals versus the precious, and the dearth of supply versus a forecasted demand. So the smart money, as I said earlier, the senior banks are pivoting towards commodities that are critical minerals, and the rest of that narrative that we all know very well. I think we've got to focus on the development of the mines instead of the rhetoric in order to meet the objectives.
So, okay, you're going to be shovel ready for Pine Point. Like, what? I guess do you want to see a little bit higher prices then, or just maybe more stability in the market? Like, what did
for Pine Point? We're going full tilt. We see hopefully permits in hand around 2028, and we're financed right to that point. And the project financing on the back end, we'll get it done. Like, I don't see that as a big hurdle.
Yeah, and then your copper project, what's the timeline?
So
what's that?
Copper is a little different. It's one we've known for a long time. It's a little earlier. We're going to be doing an internal PEA to see what's the best scale of the project. But essentially, the quick short story, I'll be talking about this later today, is there was an open pit, but there was a smelter on the lip of the open pit. You couldn't expand the pit. I was the last chief geologist there. I shut it down in 99. When I came back from Peru, 2002, they shut down the smelter. And then they reclaimed the project, $150 million. So now the smelter's no longer next to the pit. And copper went to $4 last year. It's the best time to look at it in the last 30 years.
Are there other projects you like? Like, what do you like? Do you want to focus on these? Do you want to grow organically? Are there projects that that you're looking at expanding? Like, because I do like.
Well, for a non-cash flow junior, the two projects we have, I'm proud to say that we're going to be able to get both of them done. We'll find a way between the Osisko Group, the reputation, the access to capital, the access to expertise, my old network, and with Appian, our new partner at Pine Point. They have a multi-billion-dollar fund looking for mining assets. They are bullish on zinc, as we are, hence the partnership. And of course, they're bullish on copper. So we'll see where all of that goes, but step by step, right? But are we interested in other projects? Yes, we always look at other things. You always got your ear open. I would say that for the short term, we're busy, and you gotta prioritize your time. There's a lot of people that do bring us stuff, but we have some pretty quick filters, so we don't spend a lot of time on what we don't think will work. We are quick at turning them down and look for the right one.
Yeah, because the reason I ask is like the run up to get a mine into production is so long. Like
the energy you put into it.
Yeah, and you know this idea that this demand for copper is not going anywhere anytime soon. So it's what does growth look like at Osisko Metals? I guess
I would say like we're talking a substantial copper mine at Gaspé Copper. We're looking at potentially 70,000 tons a day or more. Other copper assets are on the radar. We've been looking at projects for 5 years. We got our list. But when and how we move, I think it's a step-by-step process because each project has to be a success. And on the back of that success, we'll look at completing others. But right now, with the two development projects, let's get those done. I think that's what the market wants. But we're always looking and thinking the bigger picture, but I think it'll be tougher. I think right now is a good time for people to be looking at getting assets. Right now is the best time. So we have the two we want.
Why do you say that? Like, to me, it feels like this would be the
cycle starts and the price goes through the roof. What you want today is going to be 25% more in 6 months, or 50% more in a year or more, right? So I can't forecast that, but due to the price going up, those copper assets are going to get more expensive as we go. Right now, on the back of the pandemic, prior to all these, the objectives that we want to meet, the critical mineral strategy, the post-COVID stimulus in the case of zinc, where infrastructure is going to need a lot of zinc, you're right in the middle here. And it's just how long are we going to get stuck in more geopolitical uncertainty, be it the Ukraine situation or be it potentially the market risk that people are talking about. If the market risks and the geopolitical uncertainty dissipates, I think we're off to the races in the mining industry.
Wow. Jeff, on those optimistic words, thank you very much.
Let's stop there. Yeah.
Thank you very much for your time. It was a pleasure talking with you.
Pleasure to talk with you too. Thanks for your time.
Thank you for watching Kitco Mining. Stay tuned for more coverage from the CIM Convention and Expo. If you like what you see, please press the subscribe button down below.
Kitco Mining's special coverage of the CIM Convention and Expo is brought to you by CSE, the Canadian Securities Exchange.